market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Trump administration's actions against the Fed chair, Jay Powell, have triggered a backlash that could derail the White House's plans to tighten control over the central bank. Fed officials and U.S. senators from both parties have pushed back on the investigation and reiterated the importance of an independent central bank.
Throughout that time, he has been completely dedicated and committed to the Federal Reserve's mission to support the American people. And throughout that time, he's proven himself to be a man of impeccable integrity and a man who has been calmly leading the Federal Reserve through times of heightened uncertainty and led us very effectively.
That's what this probe is. It's a pretext. It's a way to try to knock the legs out from Jerome Powell. I'm no Jerome Powell supporter, but I am a supporter of Fed independence. And the weaponization of the Department of Justice is fundamentally wrong.
Well, we're now joined by Bloomberg senior editor Alastair Bull. Alastair, good morning. Another obstacle in Trump's path. How is this going to affect his plans to replace Jay Powell?
Well, good morning, Francine. I mean, they'll stop them dead until this matter is cleared up. He's lost. He's losing. He's been clearly warned by senior Republicans that they see this as a direct assault on the independence of the Fed. Most importantly, Republican Senator Tom Tillis has said he's going to block any Fed nomination to the board until the matter's been resolved. And let's not forget that the important news we were expecting around the Fed was going to be Trump's pick for the next Fed chair. That could come this week even. I mean, probably not now, but I mean, certainly we're expecting it in January. If Tillis carries through on his threat, any nomination is going to be blocked in the Senate Banking Committee, and that's really going to grind the thing to a halt.
Yeah, Alastair, I mean, Jay Powell is Fed chair, but he's also Fed governor. So has this made it more likely that Powell will stay on as governor when his chair term expires?
We don't know that, but certainly there are people who listened carefully to his statement on Sunday and took the coded message as a warning that this is going to this is going to push him to stay in place. So his chairmanship expires in May, but he has the governor's role until January 2028. And he can remain in that seat unless he's removed for cause, basically through most of Trump's term. Now, the issue of removing for cause, of course, is front burner for the Federal Reserve because another Fed Governor, Lisa Cook, her case is being reviewed by the Supreme Court, and they're expected to rule later this month. And if they rule in her favor, that really protects the Fed from this sort of unilateral action from the administration, really gives them a carve-out, an important carve-out.
Alastair, thank you. Alastair Bull, they're Bloomberg's senior editor, of course, for many years covering the Fed. Now, the Japanese Prime Minister, Sanai Takaishi, is reportedly planning a snap election that would provide a mandate for her to continue hawkish diplomacy and pro-stimulus policies. Well, let's get Isabel Reynolds, Bloomberg's Tokyo bureau chief, on the line. Isabel, so Takaishi only started her premiership in October. So how would calling a snap election help her, and what are the risks?
Yes, well, I think to understand why she would make this decision, you have to look at how she came to office last October. She wasn't brought in by a general election. It was just a party vote, and she was brought in to replace the previous leader who stepped down. So she hasn't had a chance to go to the public, and that's left her in a bit of a weak position. At that time, she was seen as a rather sort of fringe figure, even within her own party. She ended up alienating her own coalition partner, which left, and she had to scramble around and try and find another coalition partner. She lost her majority in the lower house at one point and ended up with a majority in neither of the houses of parliament. So there is a good reason for her to go to the public now and to try to get her own majority, a majority potentially for the LDP, her ruling party, on its own, giving her a freer hand to do what she wants in terms of policy on the budget, in terms of diplomacy, and potentially also sort of bolstering her presence on the international stage. I mean, she would be somebody who would be in place for several years to come, and people would have to take her seriously. On the other hand, I mean, the corollary of what I've said about alienating her previous partner is that the Cormator, the reason why the LDP was in that coalition with Cormator is because they were excellent at getting out the vote. This will be the first election the LDP goes into for many, many years without that partner. And whether the popularity that Takaiti undoubtedly has among the public will translate into actual votes remains to be seen.
Yeah, it always feels like a big gamble, like double quits. We've seen sometimes how it ends in the UK with prime ministers. Isabel, thank you. Isabel Reynolds, Bloomberg's Tokyo bureau chief, now joining us to discuss all of this, all of the U.S. policy, all of what we've heard from the Fed and the path ahead is Grace Peters, co-head of global investment strategy at JPMorgan Private Bank. Grace, as always, thank you so much for joining us. I mean, I feel like because of the news since the start of the year with Venezuela, oil, now the Fed chair, everything that's happening in Japan, the news cycle is just really condensed. Does it make it much more difficult to not change your calls?
No, look, I mean, we laid our outlook out last year. We had AI, we had global fragmentation, and we had inflation as our three key themes. And I think that this is playing out at the moment. I mean, look, geopolitics, when we think about one specific event, it rarely has a lasting impact on market. But what we're seeing now is something different. It's the confluence of many different geopolitical, but also political agendas, which are coming together and I think are really changing the fabric, not just of economies, but also, therefore, of markets and of the portfolio construction you need in this kind of world. So when we think about the economic nationalism, countries really looking inwards, national security issues, everything that supports the good of that country, that's being met with fiscal activism. You know, we saw some of that in your report on Japan, pro-growth policies. And really this does mean potentially higher growth, but also higher inflation and higher inflation volatility, which is really what we're bringing together in assets like gold, hedge funds and infrastructure to complement stocks and bonds.
Grace, how is 2026 going to be different from 2025? If you look at, if 2025 is actually President Trump laying out his agenda, are we going to see, companies, countries retaliate? And how much does that change the dynamics in markets?
Yes, I don't know so much about specific retaliation. We had some of that and a lot of negotiation through the course of last year. But I think what will be different is some of the monetary policy impulse. We obviously had a lot of cutting from central banks last year, loosening financial conditions. Some of that will come into this year, but I think this is going to be much more a year of fiscal rather than monetary policy. We need to watch, some of that monetary policy, how it flows through the system, because if you see to events like Fed independence or Fed efficacy, actually whilst the front end of the rates curve can come down a little, curve steepening and the back end going up, you're not going to get that benefit flow through the economy, and that could again have implications for correlations if we think about cross assets. So many of the themes from last year coming into this year, but different when it comes to monetary versus fiscal. I think on artificial intelligence there'll be a difference this year. Last year it was all about the capex. You saw our AI capex contribute about 40% to GDP. This year I think it's all about the use cases broadening through the economy, when we see earnings season this year, I think a lot more companies are going to talk about their use cases. We already saw 47% of companies in the third quarter. I'd expect in fourth quarter even more. So definitely an evolution of many of those themes this year.
Grace, when you look at AI, when do we know how much job displacement it also brings? We're also hearing, not hiring freeze, but a slowdown in hiring as a lot of companies need to spend on these systems and so can't afford to hire more people right now.
Yes, I think it's definitely one of the remaining questions out there when it comes to the labour markets. There is some evidence that you're starting to see, particularly at the graduate part of the market, the job market, some potential signs that you are seeing job displacement. The 47% of companies that I mentioned for the S&P, they're generally talking about AI use cases that pertains to efficiency gains, and that's where you could see some degree of job displacement. What we think is going to be more interesting is as companies use it to grow revenue, which hopefully also opens up opportunities for the job market as well. So our expectation is that the labour market is bottoming out here, that it's going to stay a little lacklustre. We're not going to go back to a super strong labour market, and that obviously opens up various paths for the Fed. Our base case is that the cyclical pro-growth impulse will mean that the Fed doesn't need to cut much this year, probably just once, but there is a possibility, Francine, obviously, that you see a lot of this growth accrue to a more narrow part of the market. That means you could see more Fed cuts, but again, I think that would be a boon for asset prices and only perhaps exacerbate some of those issues where value is flowing to owners of capital rather than to labour, which which again is something that I think will feature in 2026.
And Grace, when you talk about inflation volatility, does it mean higher inflation that we didn't see in 2025? So is it a backlog?
I think you could see inflation, and I think that could start with the print that we see this week. You could see inflation starting to come up again north of 3% through the first half of the year. I think it will fade as we go through the back half of this year.
This is what, tariffs?
Yes, but the lagged impact of tariffs, but also some of that cyclical strength when we think about some of the tax rebates and the fiscal spending that's going to come through. I think that will also be pro-growth, so higher growth, higher inflation in the US through the course of this year. I think, therefore, the cyclical parts of the market should continue to do quite well.
I mean, it's unclear how we should look at China, because these extra tariffs on any partners with Iran would be almost directly against China. I mean, we thought that the two superpowers were getting along a little bit better, but are we importing deflation from China, or how do you see China developing?
Yes, the relationship between the US and China, I think, is the defining relationship when we think about geopolitical, underlinings in the world at the moment. I think there are some really interesting things going on in China at the moment. Our sense is that the economy there is also bottoming out. The property market is still an issue, but it's been an issue for such a long time. I think people want to move on from that now. When we think about China's technological advancement, obviously they look at AI in quite a different way. It's not as narrow, perhaps, as the US, and therefore I think there's a big opportunity in China technology across a broader array of technologies, automation, manufacturing, etc., that I think is interesting. It's not a big allocation for us. We do think that there are interesting opportunities through EM as a result of the relationships that are developing between the US and China. But the US is still our preferred market. We do think there's interesting things in Europe for the second half of the year, but EM and China, there is a role there.
What do you like in Europe in the second half?
Yeah, so I think what's interesting, I articulated sort of this cyclical boost that we expect in the US in the first half. Some of that could start to come to Europe in the second half of the year as we think about the spending, the German fiscal spending. Defence names are still key for us. And if we do start to see that bottoming out in China, that would be positive for European sentiment and European earnings growth as it pertains to luxury goods, some of the mining companies and some of the industrials as well. So I'd own both of those regions, the US and Europe for sure, but my expectation is that the profile of growth is stronger in the US out of the gates this year and picks up in Europe in the second half.
Great. So we spent a lot of time talking about oil in the last 10 days. Have you had to change any, I don't know if it's range bound or actually if you're betting on cheaper oil because what Trump's foreign policy could do?
Yeah, it's interesting. I mean, generally we're in quite a consensus-driven market. When we look at sell-side consensus, it's pretty tight. It's tight every year, but this year particularly tight. But one of the areas where actually there's a quite wide spread is oil, and that was even before events in Venezuela and Iran kicked off in the past 10 days or so. Venezuela, I think, is less of an issue because from just, sort of supply as it is today, whilst there's a lot of reserves, sort of for future, it's less of an issue. I think when it comes to events in the Middle East and Iran, it's something to watch more closely, particularly not just the direct impact on the oil price from Iranian production, but more if we think about the flow through the Straits of Hormuz, which is obviously something we've worried about in the past and would have broader implications potentially for the path of oil and obviously inflation, but our key commodity remains gold.
I know gold was a target of 5,300,
indeed,
which is not insignificant.
Not insignificant, particularly after a strong rally last year as well. But this is still, to us, the ultimate geopolitical hedge, looking to get away from some of those overweight US dollar exposures, whether it be central banks, institutions, or indeed many of our own clients as well. 5,300 with high conviction, we'll get there.
Okay. It's wonderful to have you as ever, Grace. Thank you so much. Grace Peters, co-head of Global Investment Strategy at JPMorgan Private Bank. Now, UBS Chief Executive Jerome Ermotti warns the proposed new banking reforms in Switzerland go too far. More of our interview next, and this is Bloomberg.
Next week, live from the Alpine Mountains of Switzerland, it's the World Economic Forum annual meeting in Davos. Bloomberg Television brings you unmatched coverage and conversations with world leaders, business executives, and billionaires as they navigate responsible AI deployment, economic expansion, and geopolitical tensions. Tune in for daily coverage all next week. Context changes everything.
Conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, the FT is reporting this morning that the UBS chief executive, Head Ermotti, has confirmed he plans to step down in April 2027. It comes at a crucial time for the bank as it fights Swiss government plans to tighten its capital requirements. So let's discuss all of this in the wider banking sector with Bloomberg's Charlie Wells and Paul Davies, our banking and finance columnist from Bloomberg Opinion. So thank you both for joining us. Charlie, what do we know about Ermotti's departure, and what do we know about his potential succession?
What we know is it's looking like April 2027. And this could be a relatively opportune time because what we know since Ermotti has come into the bank to lead it for the second time in 2023 is he's really tried to project this idea of stability, really tried to kind of tamp down on any uncertainty related to the integration of Credit Suisse into UBS. And this could come at a good time, right? Because it gives a long time to look for a new leader. It gives a long time kind of leading up into the annual general meeting next year. So that is the sort of outlook for this. But of course, the FT has also reported that, the data is not set in stone yet.
What do we know, Paul? I mean, digging around, is 2027 early? Is it late? He's been in charge for quite some time and has been doing a good job.
Yeah, well, I mean, he said in 2023 when he took over that he would do it for sort of 3 to 5 years. He wanted to see through the integration of Credit Suisse. He wasn't going to stay beyond that. Expectations have started to shift ever so slightly among some analysts and investors that because of this big political scrap they're having over the stiffer kind of capital rules that are going to come in to protect Switzerland's economy against UBS as the last huge, international bank that they have there, that his departure date might start to drift, that he might have to stay until that fight was properly done. So this is kind of reconfirming that, I don't know, that he will definitely go by 2027 or, very likely go by 2027, which maybe signals that they expect the meat of the political fight to be done by then as well. But, yeah.
Do we have any idea if it would be a Swiss person or someone else?
Well, look, so Ermotti is Swiss, and that really has been beneficial to him in these difficult negotiations and discussions with the government. And I think we are entering Wall Street earnings season, and I think something that this is really highlighting, that you're seeing a lot of analyst commentary, not just about UBS, but is this issue of succession risk, right? We're thinking JPMorgan is reporting later today, and this is a case in point that succession can change in a heartbeat, right? And so I think this is something that is really focusing on how UBS could change, but also, how some of these other major global banks need to think about leadership.
Yeah, apart from Jamie Dimon, he's never leaving. Speaking exclusively to Bloomberg, Sergio Ermotti says proposed new banking regulations in Switzerland go too far. Here he is.
We believe that the current proposals are not really reflecting what happened at Credit Suisse and are going too far. And therefore, we are contributing in the debate with our views on the matter. But this is now a political process. We hope we're going to get more clarity by the second half of the year.
I mean, and they're looking at moving to the U.S. Is that a real possibility, or is it just fear-mongering?
Well, it's a good threat to have in your back pocket, I'd say. I mean, it's a difficult and expensive thing to get done. They either need to shift themselves wholesale, which could be slow and could be costly, or they need to, buy something to create a sort of a bridge. And there's been plenty of chat around various sort of wealth managers that they could look at over there. But, buying something in order to shift your domicile isn't always the best sort of, strategic choice. Or they could hope to get bought by, I don't know, Morgan Stanley or JPMorgan or somebody like that. But there's no suggestion that's going to happen. So it's sort of, there's been, chat that they would be welcomed by US regulators or the administration. So it's a good, stick to wave, but it's, is it going to happen? Probably not.
Charlie, elsewhere in banking, succession, but there's also a lot going on in job cuts. We had some at Citi and BlackRock. So how are these playing out?
Well, look, some of this is seasonal, right? This tends to happen in January. You get job cuts, you get bonuses. But some of this is structural, right? A lot of the cuts that we're hearing about 1,000 jobs at Citigroup, we're hearing about 1% of the global workforce at BlackRock. We're hearing about at UBS, which we've been talking about, some cuts in January. So these are banks that are in transition, right? right? These have been telegraphed long-term transitions that they're going through. The push is to try to keep expenses, solid, not exceeding expenses. And so a lot of this is, a fact of the structural change that a lot of these banks are going through. It's unfortunate, and some of these numbers are high, but I think we saw last month when JPMorgan talked about expenses, talked about compensation, and what that did to the share price. We're really seeing a lot of caution on expenses, and that could be playing out here. Yeah,
overall, Paul, what are you expecting from the earnings season in the U.S.? Will a lot of it will be trying to navigate the political risk coming from President Trump, given what we heard on, affordable housing, but also credit card companies?
Yes, I mean, it's a story of a great year in 2025 for lots of the businesses. Credit quality remains pretty stable, I think, for a lot of these banks. Investment bank fees, trading revenues have been, fantastic. And on the one hand, there's, attention on expenses, but there's also lots of people who are going to have, fabulous bonuses compared to sort of previous years. Everything is going to be about the outlook. Everything is going to be about, how healthy is the economy? Is unemployment going to rise, and is that going to start to cause more credit problems? And what is Trump going to do next? The tweets and the kind of the rhetoric about capping credit card interest rates at 10% over the weekend, severely knocked a bunch of bank stocks and particularly the dedicated card companies in the market yesterday. I mean, again, it seems like a wild and crazy thing that is like, how do you even make it happen? It seems incredibly unlikely, but the president has shown little regard for rules or norms in kind of any arena. And so, who knows? I
mean, I wonder whether this backfires. You've written about this, Charlie, that actually could be a risk for consumers.
Yeah. So look, Trump is so vulnerable right now on affordability, right? That cost a lot of elections. That helped a lot of Democrats win back in November. And I called a credit expert in the U.S. yesterday who worked at FICO, who worked at Experian. And he basically said, this looks great on a marquee, right? This sounds great as a campaign promise. We have limited interest rates on credit cards to 10%, but there could be a lot of unintended consequences for the consumer, right? This could backfire, as you say, because it could cut the number of cards that are out there for people who maybe have lower credit scores. Also, a lot of our viewers love perks. Interest rates help fund perks. So some of these very cherished rewards that come from some of these cards, that could be an unintended consequence if those have to go away.
Paul, I mean, overall, we thought, or there was a belief, I guess, in the markets that President Trump was very pro-banks. I mean, is that now being put into question?
So, I mean, yes and no. I mean, no in the sense that we've had some regulatory reform go through already. We're expecting more of that reform that's going to, if not free up a ton of capital, at least has taken away the threat that there would be severely increased capital demands in some of these reforms that were being worked on under the Joe Biden administration. But this, and I guess one of the things is that Scott Bessent, the Treasury Secretary, is the person who is seen to be leading that and in control of that, and is kind of much more of a known quantity by markets and seen like kind of an adult in the room in some ways. But yeah, again, it's things like the attack on institutional homeowners and credit cards just sort of undercuts that supposedly friendly approach.
Okay, thank you both for joining us. A great panel, of course, on everything we need to know about banking. Bloomberg's Charlie Wells and Paul Davies from Bloomberg Opinion. Coming up, the U.S. president seeks to pressure Iran with a threat of 25% tariffs on its trading partners. We'll discuss the implications with Sanam Vakil from Chatham House. That's next, and this is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The Trump administration is accused of weaponizing the Department of Justice to attack Fed independence, with key Republicans criticizing the criminal investigation. The Takaishi trade roars back on reports that the Japanese prime minister is planning a snap election to capitalize on high approval ratings. Plus, Citi and BlackRock announce job cuts as JPMorgan kicks off earnings on Wall Street. So U.S. President Donald Trump aims to pile further pressure on Iran by imposing a 25% tariff on goods from countries doing business with the Islamic Republic after weeks of mass unrest across the country. Well, we're now joined by Sanam Vakil, head of the Middle East and North Africa program at Chatham House, and with us here in the studio, Brendan Murray, who leads Bloomberg's trade coverage. So thank you both for joining us. Brendan, 25% on goods from Iran business partners is huge because the biggest the biggest buyer of Iranian crude is actually China.
Yeah, exactly. So this would really target China, the UAE, and Turkey, and obviously oil is among those is the biggest of all those products. But this really has the if you believe that Trump would follow through on this, it really has the potential to disrupt some of these relationships, the geopolitical relationships in the Middle East, and potentially cause the U.S.-China trade truce to dissolve.
Sanam, what are you looking out for on this trade, but also on what's happening in Iran?
Well, the government has just been cracking down on Iranians in a way that we haven't seen before. The death toll is extraordinarily high. We don't still have full access to what's going on. The country has been in darkness. Communications, internet have been shut off for over 100 hours now. I think the economic tariffs are certainly designed to deeper Iran's economic isolation and force the few trading partners Iran has left, which have been mentioned, China, India, UAE, Turkey, for example, to rethink their business or their choices in helping Iran stay afloat. I think there might be workarounds, barter mechanisms also still in play. But nevertheless, this is going to put a huge amount of pressure on the Iranian economy and could mobilize other industries in the country to go on strike, which would then, of course, unleash further pressure. The question we're really asking ourselves right now is how long can the protests go on? Do protesters have the sort of resilience and staying power to withstand the violence from the government? And can the government withstand the economic pressure it is going to be under, but the political pressure simultaneously? So it's a tricky situation.
Yeah, and Brendan, how much help? I mean, this is a story, of course, of Iran that we'll get to in a second, but how much can some of these allies help them in terms of trade routes? Or is there a work around this? Have we seen it with Russia?
Well, we've seen obviously, the sort of the fleet of ships that can move sanctioned oil around the world, has operated fairly effectively around sanctions, and so there would obviously be some effort to get around this latest round of pressure from President Trump. But when you look at the real fallout from this outside of Iran, the China issue, China did not look favorably upon the statement that the president made last night. Soybean prices plunged yesterday after the president posted this on social media, soybeans being this kind of measure of health between the U.S. and China trade relationship. And so it will really ask the questions in Washington will be, can the president apply this pressure on Iran, try to squeeze the geopolitical outcome that he's trying to, and still maintain the relative stability that exists in all of these other trading relationships?
Sanam, the German chancellor was pretty bold, Friedrich Merz, saying that Iran's regime is in its final days due to mass protests. I mean, are politicians really trying to grapple with what comes after? I mean, the fact that we're even talking about the possibility of the Islamic Republic's collapse is huge.
I think policymakers in all capitals right now are thinking about the scenarios. I think that certainly we are witnessing the slow downfall, evolution, perhaps collapse of the Islamic Republic. But I wouldn't say for certain. There are 1,000 ways that this could evolve. Collapse is possible, revolution is possible, but slow decay is also possible. It's important to remember that after the first Gulf War in 1990, Saddam Hussein's regime, lumbered along for quite some time. The pain is certainly going to be internal. I think think Iran, if it does survive this, will become much more inward focused and certainly much more repressive. But the spillover for the broader Middle East is something to watch as well. Turkey and the UAE have been trading partners as well, and they've been trying to keep the Iranian economy somewhat afloat. But here, further currency depreciation, rising inflation, and all of these uncertainties is certainly going to make this a huge and very bumpy year for the region and for Iran and Iranians more broadly.
Yeah, and it is, of course, far from clear that Iran's regime will be toppled. But what would be the consequences of all of the scenarios that you laid out, Sanam, in terms of geopolitics but also energy markets?
Well, certainly, there are, again, 1,000 scenarios. We've just seen President Trump extract Nicolas Maduro from Venezuela, but keep the regime intact. And that is something that we could very well see. The regime could sort of transform from within, producing new leadership. And of course, from abroad, the diaspora is looking to also play a role, as is Reza Pahlavi. A change in the Islamic Republic would certainly, I think, be welcome geopolitically, regionally, and internally in Iran. This is a hugely repressive regime and one that has exported massive amounts of instability across the region while also killing and repressing its own citizens. It could stabilize the Iranian economy, stabilize the region away from an ideological, deeply religious regime into something more normal. And if the Iranian economy does open up, it is seen to be one of the last frontier economies. There's, of course, a lot of business to be done, a lot of money to be made, and that is appealing to someone like President Trump. But the hard work lies in the details, changing the system of governance, the regulatory environment. This is not going to be a quick and easy fix. It's not as if you can remove Ali Khamenei and fix everything.
And Brendan, President Trump says the Iranian leadership has reached out for talks and that a meeting could be set up. At the same time, he's saying that he could order military strikes if Iran, continues killing protesters. Is there now a blur between, trade policy and foreign policy even more than what we saw in 2025?
Yeah, I believe there is, because if the region grows more unstable again, you have a lot of oil trade that comes through the Strait of Hormuz. You have a lot of goods trade that flows from Asia to Europe and Asia to the U.S. that flows through ports in the UAE. And so neither side wants to see this escalate, but the pressure is definitely mounting. The rhetoric so far has been fairly restrained, but it's these are the kinds of things that can snowball fairly quickly.
And Sanam, what role do you think the U.S. has, if any role, to play in this?
Well, like it or not, President Trump has made himself a player in what happens next, not just through these tariffs, but he is trying to support the Iranian people in these protests. At the same time, he's considering another round of negotiations with Iran. President Trump's pressure and engagement is going to be instrumental in how things unfold internally and how Iran evolves regionally and geopolitically. So he is a very key player, and he wants to present himself as someone who is taking a different tack and policy position compared to his predecessors like Obama and Biden, and even going back to President Carter. If he can change the dynamics internally in Iran or regionally vis-a-vis Iran, that would be certainly something he's considering with regards to his own legacy.
Sanam, thank you so much. Sanam Vakil there from Chatham House, and of course our very own Brendan Murray, who's in charge of trade. Now, the BBC has signaled some of its defenses against President Donald Trump's $10 billion defamation lawsuit, telling a judge that the documentary at the center of the case was fair, despite a misleading edit of one segment. The British broadcaster has asked a federal judge in Miami to pause the exchange of evidence until a ruling is issued on its motion to dismiss the case. The BBC also said it will aim to move the case to New York because it relates to a documentary that it, quote, did not create in Florida, produce in Florida, or air in Florida. Ørsted is one of the biggest gainers on the stock 600 after a U.S. judge ruled that it can resume a wind farm project off the coast of Rhode Island while it challenges the government's stop work order. It's a major win for the Danish energy giant in its ongoing fight with the Trump administration over renewable energy. Now, the judge says the government's claimed national security concerns may be a pretext to block the renewable energy project. And Germany's foreign minister says he's optimistic that Europe will reach a compromise with the U.S. over Greenland. He was speaking after meeting the U.S. Secretary of State Marco Rubio in Washington. European diplomats are scrambling to diffuse tensions with President Trump's administration as his threats to seize the island escalate. Well, Bloomberg's chief Europe correspondent Oliver Crook joins us now. So, Ollie, good morning. What have we learned from those talks, and what can we expect from other meetings taking place in Washington this week?
That's right, Francine. If we sort of evaluate the three options here that we're considering in the sort of solution for Greenland, if option number one is basically the status quo needs to change as far as the United States is concerned, and there needs to be a change on how Greenland is managed. This, option number two is the full annexation of Greenland by the United States, which is obviously not acceptable to Denmark or the Europeans. Then the third option has yet to materialize, and that was sort of the fact-finding mission that the Germans went on and sort of throwing things out there to try to see what gets purchased in Washington, D.C. So one of the things that the German foreign minister was discussing with Marco Rubio, you see them there after their discussions or before their discussions in Washington, D.C. yesterday, was this sort of idea of an Arctic joint NATO mission in the Greenland in order to secure this sort of broader Arctic area. This is, of course, to try to assuage the great fear that Donald Trump has expressed a number of times, including on Sunday, that basically Russia or China could get involved in Greenland and could eventually annex the territory. And the sort of logic is the United States needs to do that first. We heard from the German foreign minister saying that he hoped that the United States would join such a mission. We did not hear from Marco Rubio as to whether or not the United States would join such a mission or if that's getting any sort of purchase at all. And the sort of meetings we're looking forward to tomorrow are the Danish foreign minister and the Greenlandic foreign minister, both of whom will be in Washington, D.C. to meet with Marco Rubio. We should say that Denmark and Greenland have basically offered the United States close to everything except for annexation, whether it's more military bases, more military personnel, more economic cooperation. We know that that's all on the table, but we don't know really at the end of the day what Donald Trump will be willing to compromise on. Will he be willing to find a third option? That is going to be the sort of great mission for the Danes tomorrow as they go to Washington, D.C. and speak to Marco Rubio, the Secretary of State.
Ollie, thanks so much. Bloomberg's chief Europe correspondent there, Oliver Crook. Now, the French far-right leader, Marine Le Pen, is due back in court for an appeal that will decide whether she can run in the 2027 presidential election. Le Pen was barred from running for office for 5 years last March after she and several members of the National Rally were convicted of misusing EU funds. Well, let's get more from Bloomberg's Caroline Conan in Paris. Caroline, thank you for joining us. So what shall we expect from this appeal trial?
This is a highly expected trial, or retrial, I should say, Francine, given this could determine the fate of the next French president next year. Marine Le Pen, as you mentioned, in March 2025 was found guilty of embezzling EU public funds. With this ban of 5 years from running for election effective immediately, at the time, everybody criticized within her camp the immediate effect of this ban. She even got support from Viktor Orban, from Elon Musk, from Donald Trump, saying this was an example of European leftists silencing free speech. Now, with this appeal in France, the system is like a brand new trial. You start from scratch. Same charges, different set of judges. The trial will last for about 1 month, and we expect a verdict by the summer. She could be convicted again, but then the question is on the ban from running for elections. Is this ban going to be brought from 5 years to 2 years, for example? In that case, she could run for the presidential elections next year. Or is this ban not going to be effective immediately? In this case, she could appeal one more time and again run. But of course, there is this scenario that the trial ends up with the same result as last year. And in that case, she won't be able to be a candidate in the next presidential elections.
Yeah, so Caroline, I mean, what does that mean for Le Pen, that basically she's just banned?
there seems to be this little music within the national rally that her heir, Jordan Bardella, 30-year-old who has been groomed over the past few years to become her successor, there seems to be this little music that he could actually be a better candidate than Marine Le Pen in the next presidential elections, or at least a good replacement. At the moment, he's saying that he's not candidate for president, he's just candidate to become her prime minister if she's elected next year. But you have seen many opinion polls already showing that he would do actually as well as her, or perhaps even better in some cases. There was this one Odoxa poll in November showing that Bardella could actually win in the runoff in the second round against any other candidate. There was also this poll yesterday in Le Monde saying 70% of those supporting the far right believe Bardella could be a better candidate than Marine Le Pen herself.
Caroline, thank you so much. Caroline Conan there in Paris. Coming up, President Trump takes aim at Iranian oil exports. We'll discuss all of this with Carlyle's Jeff Currie next. Don't miss it. This is Bloomberg. So the U.S. president targeting buyers of Iranian oil with a threat of 25% tariffs on countries doing business with Tehran. You know, there's a lot of news in the oil markets, but also raw materials. I could not be more happy to speak to Jeff Currie from Carlyle. Jeff, you are the person that understands what's going on. I remember you telling me, last year that we're running out of stuff, but Venezuela, Iran, causing a huge, geopolitical risk in global oil markets. What does it mean for how the markets will react in the future?
Well, I think there's a lot of focus on the fundamental impact of Venezuela, the fundamental impact of Iran. The geopolitical impact is by far the larger impact. And I think you need to think about this not through the lens of the Americans, who are a big exporter of oil, but through the lens of the Europeans, the Chinese, and the Indians, who are big importers of oil. The world just got a lot more riskier. The way I like to liken it was when the Americans and Europeans froze the central bank assets of Russia, we saw a huge demand for gold because dollars became risky. This is identically the same thing for oil and all of the raw materials and real assets, because they are becoming a lot more dangerous. Yeah. So I'm China. I felt pretty secure about oil underneath the ground, whether if it was in Venezuela or in the world before. Today, I'm no longer. I want oil above ground. Right. And so the risk, they take it.
But so what does that mean? What does China do? And actually, is the outlook, more bullish for oil full stop?
Yeah, I mean, the market's got a record short based upon this oil supply glut. Let me remind you that oil supply glut is floating in dark fleet ships in places like the South China Sea. So if I were China, I'm looking at this and it got a lot more dangerous, where am I going to go? Mine, take it all. And they bring it in. They already own most of those ships. Chinese insurance, Chinese payment systems. So the odds of this thing disappearing and people beginning to hoard, I think, is a lot higher than what it was even a week ago.
Jeff, how would you describe U.S. foreign policy when it comes to actually access to raw materials and oil? Is it, by all means necessary, we will have it?
But no, in fact, I'm picking on the Americans unfairly right now. But if I'm the Americans looking to the Chinese already did it to me with rare earth metals. So this game is already in play. And so what it's forcing is a re-rating of real assets prices, and I think we're witnessing it. And if gold could go from 2,000 to 4,500 as they hoarded precious metals and diversify away from dollars, what happens if they start hoarding raw materials for a similar type of convenience yield?
Okay, this is the Currie chart. So let's bring it up. Yeah. It's basically looking at raw materials overall. I mean, are we going to have record after record if there's, again, a price? I know you've been long bullish on copper. Does the record reach this month mark a peak, or does it keep on going higher?
It just keeps going. I think
this is your chart.
Yeah, and what this is raw industrial materials. This is what I always used to look like when I was back at Goldman Research. It's telling you that there's tightness at the small little commodities that go into the manufacturing of everything. everything. This is your underlying cost structure of the economy, and it's starting to rise and rise quickly, which is telling you it's a combination of hoarding. We look at new order to inventory ratios. They're beginning to turn up. It means there is a demand for inventory, and it would make sense given the type of political risk that's out there.
What can do something about it? Who can do something about it? Can OPEC Plus do something about it on oil? Can some of the BHPs and Rio Tintos of this world do something about it when it comes to raw materials?
It's a fine line. If you start bringing on the supply to push it down, then you run into capacity constraints. You run into capacity constraints, then fear kicks in. Bottom line is once hoarding begins to kick in, and you and I were talking about this, I think it was 2021, 2022, and hoarding took off, and these markets doubled in many cases. And I think as the hoarding begins to become more of a dominant feature in the market, what's different this time is in markets like oil, you got the short, 2 weeks ago it was 230 million barrels short, bigger than what the glut is that's floating out in the South China Sea in these dark fleet ships. So the market going in is record short. Demand is not slowing down, it's picking up, and geopolitical risk is at, I would say, an all-time high. That's a recipe for a spike in prices right now.
If you look at Iran, Iran is like a game changer, right? It's not, Venezuela is like small in comparison to
right.
Iran.
Oh,
what are your expectations in Iran?
Yeah, let's just, let's say we do get a regime change. I'm not a geopolitical expert.
At this point, I don't think anyone is, to be fair.
Yeah. So let's say we do get it. I'd like to point out in Iraq. Remember when it was George Bush Jr. went and did that victory landing on that aircraft carrier. I think it was in 03, 04. It was over a decade later that you got the increase in oil supplies. Yeah, it's exceeded now. A quarter of a century later, it's exceeded expectations, but it took you a decade. Why? Infrastructure was dilapidated. And by the way, the infrastructure in Iraq in 2003 and 4 is much better condition than what it is in Venezuela today or Iran today. So if it took a decade then, hundreds of billions of dollars, $100 to $200 billion. We're a long ways off of seeing supply come to this market and push down prices. The only immediate supply you can get is the floating storage out there. But if I'm China, I'm going to take it while I can.
Jeff, I know you've written about the trillions of dollars that Europe needs to invest in some of the defense sectors, and presumably that's even higher because of what we're living through right now, also with the threats on Greenland. Do you see a political will for Europe to act?
I like to say it's an existential threat, and it grows every single day. And nothing forces, change better than having an existential threat. I think we're getting there. And, I think the markets are beginning to price it in, too. We've talked long about the revenge of the old economy, which is that rotation out of new economy, high, tech into old economy, commodities, and, basic industrial. You look at that sector, it looks like the AI trade peaked in the fourth quarter of last year. The best performing sectors are these old economy sectors that have really rallied, beginning over the last month or two. So I think we're in that middle of that rotation, and I think it's going to get bigger, and defense is definitely part of that, European defense.
We started the interview with you, with you saying, reminding everyone that actually the world got a whole lot riskier. Where do you see the next risk?
Next risk is going to most likely be in, with these basic commodities and affordability, starting to put pressure across the, interest rates and everything like that. And, the curve is beginning to steepen on the yield curve. And then you got to ask, as the yield curve begins to tip out and you start to see higher interest rates further out on the back end, are people going to be willing to sell these commodities? It starts to become even that much more riskier. So it becomes a snowball effect. In fact, when you go through these repricings between old economy and new economy, it creates a really violent move across all these. We lived through the one in 14 and 15. The euro went from like 1.4 down to parity. Oil goes from 140 down to, they went down, I think, 25. And similarly, we went another one, and it was 01, 02, where you went the other direction from new economy to old economy. And I think it represents that risk that as your underlying cost structure of the economy changes and a re-rating of real assets. It's
like a shock.
It's a shock. And that picture that I just showed you of the raw industrials, that means these real assets, the real assets that underline the underlying economy are beginning to move on you. So that re-rating of real assets, I think, is underway. And if we saw what happened in gold, is you already see it happening in industrial metals. It can move into the energy and the rest of the other commodity complex. And hoarding is a big part of it.
Jeff, as always, thank you so much for joining us. Jeff Currie there, Chief Strategy Officer of Energy Pathways at Carlyle. And Bloomberg is also hosting a live Q&A this afternoon asking, are the rich turning their backs on the UK? So we focus not only on commodities and Iran, but also on what's happening in the UK. That's at 2 p.m. London time. Head to Bloomberg.com/live Q&A to take part. Up next, Bloomberg Brief, and this is Bloomberg.